Hello, and welcome back to the channel. If you're looking for expert insights into the world of investing, you've come to the right place. In today's video, we're doing an in-depth analysis of one of the biggest players in the tech space, Microsoft. We'll take a look at the bull case, the bear case, and where Microsoft's stock stands today in terms of its fair value. Let's dive right in. Company overview. Before we get into the nitty-gritty of the stock, let's quickly cover what Microsoft does. Founded in 1975 by Bill Gates and Paul Allen, Microsoft has evolved from a software company known for Windows to a tech giant with a diversified portfolio. Today it spans cloud computing, gaming with Xbox, productivity software like Office 365, and enterprise solutions with Azure. The company's biggest growth drivers recently have been cloud and artificial intelligence, especially after acquiring GitHub, LinkedIn, and most recently Activision Blizzard. The bull case for Microsoft stock. Now let's talk about the bull case. Why investors are optimistic about Microsoft's future. 1. Cloud dominance. Microsoft's cloud platform, Azure, is the second largest cloud service provider in the world, only behind Amazon Web Services or AWS. Azure's growth continues to accelerate, and as businesses shift more operations to the cloud, Microsoft stands to benefit tremendously. Recent reports show that Azure's revenue growth is strong, and Microsoft is expanding its enterprise customer base at a rapid pace. 2. AI leadership. Next, artificial intelligence. Microsoft has been investing heavily in AI, particularly with its multi-billion-dollar investment in OpenAI, the creator of ChatGPT. By integrating AI into its Office suite and Azure cloud offerings, Microsoft is positioning itself as a leader in the AI revolution. This could drive future growth as AI becomes more embedded in every industry. 3. Diversification and financial strength. Microsoft is not just about Azure or Office anymore. It's a diversified behemoth. Its acquisition of LinkedIn has paid off with strong revenue from ads and professional networking. Activision Blizzard, once it closes, will give Microsoft a dominant presence in the gaming world. And let's not forget about Microsoft's fortress-like balance sheet with strong cash flow and low debt, which provides the company with the flexibility to weather economic downturns and make strategic acquisitions. 4. Consistent growth. Finally, Microsoft has proven itself as a steady performer. Over the past decade, the company has delivered strong revenue and earnings growth with healthy margins. The shift towards subscription-based services like Office 365 and Azure means that Microsoft has a more predictable and recurring revenue model. The bear case for Microsoft stock. However, as with any investment, there's always a bear case. Let's break down the potential risks that could impact Microsoft's stock. First, intensifying competition in cloud and AI. While Azure is growing, it's still facing fierce competition from Amazon's AWS and Google Cloud. In the AI space, Microsoft is up against other heavyweights like Google, Amazon, and smaller specialized companies. If Microsoft fails to maintain its competitive edge or faces challenges in scaling AI solutions, it could lose market share. Next, regulatory risks. Microsoft's proposed acquisition of Activision Blizzard has drawn scrutiny from regulators, particularly in the US and EU, over potential antitrust concerns. If the deal doesn't go through, it could hurt Microsoft's gaming strategy and diminish investor confidence. Moreover, Microsoft, like other big tech companies, faces increasing scrutiny from governments on issues such as data privacy and antitrust violations. Then, slower growth in core businesses. Microsoft's legacy businesses, Windows, Office, and even LinkedIn, are seeing slower growth. While these segments are still highly profitable, they may not contribute as much to overall revenue growth in the coming years, especially as other areas like cloud and AI take center stage. If these growth engines can't offset slower performance in the legacy businesses, Microsoft's overall growth could be more muted. And finally, valuation concerns. Speaking of growth, some investors argue that Microsoft's stock may be overvalued at current levels. With a price-to-earnings ratio significantly higher than the broader market, there's concern that much of Microsoft's future growth is already priced in, which could lead to downside if those expectations don't materialize. Determining fair value of Microsoft stock. Now, let's talk about Microsoft's fair value. The stock currently trades at around $330 per share as of today, with a trailing price-to-earnings ratio of about 35. Microsoft is priced at a premium compared to the broader market, but this is common for high-growth tech companies. To estimate fair value, we'll consider a few key factors. First, Microsoft's earnings growth over the past 5 years has been around 15% annually. If that growth continues for the next 5 years, we could expect earnings to grow at a similar rate, though some analysts project a slight deceleration to about 12 to 13%. Given that, we'd use a conservative price-to-earnings multiple of 30, still above the market average, but reasonable for a company with Microsoft's competitive advantages and future growth potential. This gives us a target price range of roughly $300 to $350 per share, which suggests that, at current prices, Microsoft is fairly valued or slightly overvalued, depending on your assumptions about future growth and market conditions. Conclusion. To wrap things up, Microsoft is undeniably a strong company with an impressive portfolio of assets. The bull case is compelling, with growth potential in the cloud, AI, and gaming sectors, as well as a solid financial foundation. However, there are risks, particularly from competition, regulation, and the potential for slower growth in its legacy businesses. As for its fair value, Microsoft appears to be priced for continued growth. But some caution is warranted given its premium valuation. If you're an investor, you'll need to decide whether you believe in the company's ability to deliver on its ambitious growth targets. In conclusion, Microsoft remains one of the most powerful players in the tech space, but it's crucial to stay informed about the challenges and opportunities it faces moving forward. Thanks for watching today's analysis of Microsoft stock. If you found this video helpful, make sure to give it a thumbs up, subscribe for more insights, and hit that notification bell so you don't miss future content. Let me know in the comments what you think about Microsoft. Do you agree with the bull case or the bear case? See you in the next video.